Bitcoin is continuing to earn its stripes as a major geopolitical asset for some of the world's most maligned countries, as we see 3 different countries exploring the concept of Bitcoin bonds. The first story today is coming out of Belarus. The president of Belarus, Alexander Lukashenko, has decided to support the development of a giant data center dedicated to Bitcoin mining. Now, the plan is to establish the mining farm next to the Belarusian nuclear power plant. The project is intended to be completed by the end of 2019. Now, this is yet another sign of the overall Belarusian government's stance towards taking positive steps in order to welcome the crypto industry into the country and, of course, to welcome in new innovation. Overall, this is part of the plan to upgrade the economy by 2049, a plan that includes things like offering incentives for 0% VAT, 0% corporate profit tax, 0 customs duties, offshore duties, income tax for foreign entities, tax on sales of shares of high-tech park residents, and 0 tax on revenues of foreign companies. That's a lot of tax savings right there. And of course, a lot of incentives for companies to come and set up shop in Belarus. And even the ICO industry gained legal status in the country recently. Projects can now issue tokens, facilitate Bitcoin and crypto trading, and of course, run mining enterprises, which is what today's story is all about. All of this under a tax-free structure, which specifically will expire in 2023. Overall, though, I think it will be a very, very tough road for Belarus overcoming the last dictatorship in Europe stigma that they currently have. And I would suspect that given the option to go, well, basically anywhere else, but specifically somewhere like, for example, Malta, which is both very crypto-friendly and, of course, is in the European Union, that many crypto companies will continue to not choose Belarus. But still, great to see them moving forward. And, of course, nuclear Bitcoin mining, I guess, is better than coal Bitcoin mining. And it is, of course, nice to see state-level approval for Bitcoin mining and the Belarusian state supporting them. Now, of course, we just need companies to actually hop on board with that. Of course, considering we might see different legislations coming out of Russia, which might be against the industry. We could see a lot of refugees moving to Belarus, at least. But for anyone who can access those EU markets, I think Belarus is going to have a very tough time. On to our next story. The governments of 3 different countries have formally acknowledged their interest in issuing a sovereign Bitcoin bond in order to raise capital. Afghanistan, Tunisia, and Uzbekistan are currently mulling the possibility of launching Bitcoin bonds. All 3 have really expressed interest in getting these instruments as a potential tool to help out their critical sectors of their economies. The announcement was made at a meeting put on by the IMF and the World Bank, 2 institutions which, to be honest, I really don't trust that much at all, but this is what they're doing. The IMF in particular is, I really feel like a financial wolf who occasionally wears sheep's clothing. But anyway, I digress. The exact details of these bonds are yet to be released, but a bond in general basically is kind of like an IOU between a lender and a borrower, which consists of the details of the loan and of its payment obligations. Basically, it allows for the issuer, the countries in this situation, of these bonds to raise funds for a new project or to fund an ongoing project. According to what we know so far, Afghanistan is planning to issue lithium bonds. Now, the governor of the Central Bank of Afghanistan has come out and said the following. Afghanistan was keen in issuing a sovereign crypto bond that uses blockchain technology as an instrument to raise some $5.8 billion in needed private sector investment for the country's critical mining, energy, and agriculture sectors. That's a lot of Bitcoin right there, $5.8 billion. And of course, Bitcoin could be coupled up with Afghanistan's lithium industry, a high demand but rare mineral. Afghanistan is set to become one of the world's largest miners of lithium. Its reserves are estimated at $3 trillion in lithium. Wow. And due to financial restrictions, it is incredibly hard for Afghanistan to actually raise funds internationally to develop that industry. Tunisia, their central bank governor, El Abbasi, who is kind of known for his more progressive stance on technology such as blockchain, has said that a dedicated working group was already studying the feasibility of launching Bitcoin bonds. And Uzbekistan is exploring issuing a Bitcoin bond which could end up being tied to cotton futures. Uzbekistan, by the way, is the world's 5th biggest cotton producer, so no small matter for their industry. A crypto issuance really could open up new ways for these countries to access international markets, which they have been excluded from for a long time in varying degrees. And now, while the word Bitcoin bonds keeps getting thrown around, I think we really need to find out what exactly this means, because they also keep mentioning Hyperledger Fabric a lot, which of course is not Bitcoin, it's Hyperledger Fabric. And it seems that these bonds will likely be issued as digital assets on Hyperledger. So, kind of not really having a lot to do with Bitcoin, unless, of course, they plan on accepting Bitcoin as a form of payment for these bonds, which does seem like the most likely scenario here, as of course it sidesteps all of those pesky sanctions, which makes it so hard for them to access international markets. But it still sounds kind of crazy. Imagine a 3-year lithium bond paid for using Bitcoin to the government of Afghanistan. That is one risky as hell investment, if you ask me, but hey, I'm not a lithium investor, I guess. Would the bond be repaid in Bitcoin? Would they repay it in fiat? So many questions, so few answers at this stage. But let's assume that one was to buy a $5,000 Bitcoin bond from Afghanistan, which is linked to their lithium industry. Then in 3 years, Bitcoin happens to be worth $100,000. So in exchange for your one Bitcoin today in 2019, then you see your bond mature, and for example, that bond, by the time they pay it out, is $10,000 to get 0.1 Bitcoin in return. Cool stuff. Sounds like a great deal, doesn't it? Of course, many of the organizations who may actually want to buy bonds from Afghanistan would, of course, likely be moving in and out of dollars, only using Bitcoin to facilitate the transactions. But still, any financial player who I think is willing to put money into Afghan bonds, which, due to a range of factors, is a very risky investment, from war to sanctions and corruption and all that stuff. Why not just hold Bitcoin? So much easier, guys. Seriously. Also, how is Afghanistan going to cash out the Bitcoin in order to, fund the operations to mine all lithium? Or has it found a supplier of heavy machinery which accepts Bitcoin? That would be interesting. Even if using blockchain to issue the bonds, wouldn't sanctions still apply to the big financial players that might actually want to invest in these kind of bonds? Anyway, in spite of my questions, I actually think that this is a very positive development for these countries, and a really, really, really cool way for countries to actually raise capital for their bonds, especially when it means that anyone, anywhere can buy these bonds regardless of international sanctions regimes or financial restrictions. And you guys know how I feel about the international sanctions regimes. Afghanistan, Tunisia, and Uzbekistan are all targets of financial restrictions in some form or another, which of course has made it very difficult for these countries to actually access international capital. And of course, their low credit ratings make it even more difficult and more onerous to raise funds. And in spite of my questions about the details, what these bonds are actually going to look like, I guarantee that there are investors out there who, for example, would really, really like a part of Afghans' lithium boom via these bonds. And to see these bonds being paid for in Bitcoin and then issued on Hyperledger Fabric is actually really exciting. And when you think about the potential of billions of dollars of government bonds being purchased using Bitcoin, what oh what could that do to the price and the demand for Bitcoin? Also, an important part of this story is our good friends, the IMF. Only a few weeks ago, Christine Lagarde, who of course is one seriously switched on and clever lady who actually knows her stuff when it comes to cryptocurrencies, unlike so many of her peers and other commentators from her world, but who sadly works at the head of the predatory IMF. Anyway, I'm digressing again, but she has come out and said that any move into crypto assets should be slow, and that establishing regulatory sandboxes is the way forward. We could actually see these three countries proposing Bitcoin bonds as the possible test cases in her imaginary regulatory sandbox here. These may be the very test cases that she wants to see happening and was mentioning. She was also recently quoted saying, "Above all, we must keep an open mind about crypto assets and financial technology more broadly, not only because of the risks they pose, but also because of their potential to improve our lives." A little funny addition to this IMF story is the IMF and the World Bank are launching their own cryptocurrency called Learning Coin, which will only be available within the walled gardens of the IMF and the World Bank. But still, it is quite interesting and worth a mention, because in a statement, they basically explained that this crypto asset is intended to give its staff a better understanding of basically how cryptocurrencies work, what it is, how smart contracts work, to understand the transparency of it, and of course, all the bad stuff like money laundering. In a blog post also recently, the IMF said that in a cashless world, there would be no lower bound on interest rates. Really, IMF. A central bank could reduce the policy rate from, say, 2% to -4% to counter a severe recession. Basically, a direct tax on deposits and cash in your account. Basically, of course, forcing savers to hold up the economy. A lot of banks already have these disgusting bail-in clauses that let them steal money straight from your account. This is just adding to that. The Swiss National Bank actually just said that it can already lower its sub-zero interest rates even further. This is just another way for the bankers to possibly steal from you. You know what doesn't do that? Bitcoin doesn't do that. Bitcoin doesn't have negative interest rates. Good old Bitcoin. Now back onto our newfound crypto enthusiast countries, Belarus, Tunisia, Afghanistan, and Uzbekistan. They are all basket cases in one way or another. Let's keep it real about those countries. But Bitcoin, like with its initial days of being the money of the Silk Road, is now a geopolitical setting that is starting on the fringes again. Other players are taking an increasing interest in Bitcoin as well, countries like Iran, Russia, Venezuela. The global financial system with its built-in power politics, which operate inherently in the favor of the dominant pole, are creating an entire class of economic refugees, but at a state level. Refugees who are slowly gravitating towards Bitcoin. It may not be the adoption that everyone wants, but it is the adoption that is happening now, and it may just be the adoption that Bitcoin needs. Bitcoin is going where its need is the realest. The countries with the lesser need will be the ones that will probably follow in last. While bond issuance is not a central bank directly sucking up BTC on the open market, but if the bonds are paid for in Bitcoin, it will be direct exposure to the asset class at a state level for these players. And that, to be honest, is really, really big. Anyway, just my two Satoshis. As usual, you guys let me know what you think about this or any of the other stories from today down below in the comment section. As always, thank you so much for your time and coming over here to watch these videos. You guys are supremely awesome. If you haven't checked out Cryptocurrency Explained yet, make sure to check it out. It's a 5-hour free educational course, perfect for beginners, great for people who have already been around for a while. Everyone's got something to learn from this course. You can find it here on YouTube in this playlist. You can also find it at thecryptolark.org or over on Udemy under Cryptocurrency Explained. Thank you guys so much. Hit the thumbs up if you did enjoy this one. And of course, subscribe to the channel if you're new around here. Long live the blockchain. And peace out till next time.